Hi, everyone, and welcome to the Friday, June 17th installment of the Silicon Insider, the only uncensored look at life and business in the Valley. My name is Mike Malone. I'm here with special contributor Scott Budman, technology reporter for NBC Bay Area. Our producer is Jordan Henderson. Our East Coast correspondent is Bob Grove. And our host, as always, is the Silicon Valley Business Journal. Okay, Scott, interesting week. Kind of an odd week. Kind of a terrifying week, too. So let's start with the terrifying. The markets are tanking. Things are not looking good. The numbers up today, I noticed they were way down yesterday.
Yeah, so as we speak, and again, we're speaking early Friday morning, the Dow down a bit, the NASDAQ looks stronger. But yeah, this has been a week where investors have reacted to all of the inflationary pressures and recessionary pressures being put on by the Fed by pretty much running for the exits. And I don't think we've seen a complete throwing in of the towel yet. That a lot of
It's
people
not entirely a bear market, but it is sure starting to growl.
Right. And we're seeing individual stocks, especially on the tech side, just get hammered. I mean, they've lost much more than the 20% for a bear market. And that has dragged down the overall market. And I think part of it is because things got so ahead of themselves. These were stocks that made a lot of money for investors during the pandemic. And now, as we're starting to see people go back to doing their normal things, they're not as excited about these stocks. Selling breeds more selling. Inflationary pressures mean we have less money to put towards risky things. So I think especially with tech and say cryptocurrencies, you're seeing a lot of people either pull their money out or just watch it evaporate very quickly. And that's why it's been a terrifying week.
Yeah, I think we've erased all the gains in the Dow since the last election or something like that. I mean, it's sort of like we're back to status quo ante, 2020. I mean, this is disturbing.
Well, right. I mean, we had a lot of rallying going on,
Yeah.
but I don't know that we had a new set place where the Dow should be. And so I had a feeling, you just sort of got a feeling that what we were doing over the last couple of years wasn't necessarily the new normal level for these markets.
It was
And I think now they're trying to,
it was
yeah,
an artificial market,
that's a good
basically,
way of putting it. Yeah,
created by COVID,
right.
essentially. Yeah. Okay. And reality's coming home. I notice we're starting to see we've mentioned that when the layoffs start, that's when it really picks up momentum. Now we're starting to see the pre-layoffs, which is like Spotify. We're slowing hiring by 25%. Okay, well, there you go. We'll get into crypto soon in a moment here, which is in really bad right now. And I think we've now found your definition. We've seen the fulfillment of your term frothy. Right now all the bubbles have gone out of the froth. We're looking at, dead flat water. So let's get into that right now, actually. So by the way, what do you think it is? Fear of recession, high interest rates? I mean, I noticed the market just crashed when the Fed announced that giant interest increase, that jump. So is it interest rates that people are afraid of right now?
Yeah, I think interest rates, but also inflation. I mean, remember the 50 basis points some time ago, and the Fed said, all right, we think this is going to be enough, that we can do this a couple of times at the 50 basis point level. And people were, hey, that's actually a very gradual
Yeah, we
easing.
can live with that.
Right. And a lot of people were talking, using the term soft landing. But then the markets kept on going down, inflation kept on going up, and that's what scared people, I think. And then the Fed's reaction was very strong, almost like pulling an emergency brake.
Yeah.
And you felt kind of this shuddering, and investors were no longer confident in that soft landing. But now there's even more uncertainty ahead with high prices that have not slowed,
Still
and
have supply
combination.
shortages.
Right. We still have supply shortages. And I think one is helping to lead to the other. And
Yeah.
so I think not only are people pulling out of the risky things, and we'll talk about crypto, but also tech stocks, but I think they're just getting nervous in general because so far, nothing the Fed has done has slowed inflation. And the last time inflation,
We do not feel the bottom yet.
right. And the last time inflation was this strong and powerful was back in the 80s when it did end with a very long recession. And I think that's what people fear.
Well, we talked about this, that the only way you can actually defeat inflation, because it's a monetary phenomenon, is with a monetary solution, which is to raise interest rates. And, and then there's always the danger you can end up with both high interest rates and a recession, which is what stagflation looks like. And I have a feeling certain folks out there are feeling that maybe stagflation is once again a possibility, that we could be going back into that. And that one's a really tough one to get out of.
Well, right, because then you would have higher prices, but also the likelihood of lots of layoffs. And, you've heard the term, when your neighbor loses his or her job, it's a recession. When
Yep.
you lose your job, it's a depression. And I think a lot of people are worried about not just paying for things right now with their current jobs, but having to struggle through this economy without their jobs. And you've said it, we're starting to see some of the early signs that layoffs are coming, but nobody wants to be the first to pull the trigger on a huge layoff. So
Right.
we've seen some minor ones, but it's hard to imagine that we're not going to see more in the near future, simply because some of the valuations, not to mention sales of these companies, have gone way down recently.
I'm still getting all the real estate flyers, and houses are still selling above list price in Silicon Valley. And that just strikes me as crazy. Is there that much demand? And if you learn anything from living in Silicon Valley, is when you get one of these, stick around for a few months and you can get some real bargains on homes. And yet people are still paying over the list price. What's going on here?
That I think is also going to change, maybe not drastically, a la, say, 2008, but real estate agents are starting to tell me that they're seeing the telltale signs of a slowdown.
Yeah.
Fewer multiple offers, fewer overbids, that sort of thing. And it goes to figure, because not only are there more houses for sale, but mortgage rates have gone really, really high in a very short period of time. They've doubled since the beginning of the year. And granted, 6% is not as high as it's been in American history, but it's as high as it's been in recent history. Yes. And I think that's keeping some people from just throwing the money around, because not only do you have to come up here in Silicon Valley with a giant down payment, but then to know it's going to be a 6.25% rate going forward. Some people are thinking that's another reason to wait this out if you can.
Right. And, one of the phenomena that really devastated the economy 40 years ago was that everybody bought into housing with variable mortgages. And that was the killer. That, we were sold on, get a variable mortgage, because then when interests go down, you can, you'll do better and the houses will be cheaper. And then all of a sudden people found themselves with 20% mortgage rates. I wonder how many mortgages in this town are variable.
I don't know. I know that the typical thing to do is a 30-year fixed if you're not super rich and buying with cash.
Right.
And I've been asked that question a lot as interest rates go up. And we're going to see that in the next cycle. What do we do if we're homeowners? I always tell people, if you've got a fixed rate, it's a fixed rate. Don't worry about that. But if you have an adjustable rate,
you break out the champagne, you made one very good choice.
right? But an adjustable rate that can go up. And again, if you're looking to buy right now, just know that mortgage rates are going to probably tick higher in the very near future.
Yeah. Okay, let's keep going. As long as we're on the bad news, crypto winter, whatever that means. But Coinbase got killed this week, right? They laid off, how many people they lay off? 18% of their employees?
Yeah, about 1,000, 1,100 people. Yeah.
Yeah, Bitcoin dropped to 21,000, which is 70% below its high of 68,000 per coin in November. Ether, the second most valuable digital currency, has lost about a third of its value since last Friday, and it's dropped 75% below its highs. This is a bloodbath.
It is, but it's not the first that cryptocurrencies have seen. And it's interesting, if you trace the big drops, each time they've happened at higher levels. So here we are at 20,000 as you and I speak right now. which is higher than the 19,000 of, a little while ago when everyone said, oh, this is
Oh,
crazy
yeah,
high.
I mean, it's ratcheted up and we're bitching, even though you're still ahead of the game. But nevertheless,
Right.
these are pretty devastating blows.
It is, and it's almost silly for me to use a long-term factor here because a lot of people get in for the short term on these things. It's very speculative. We've talked about that. It's very risky. You're starting to see that riskiness come home to roost. A lot of people have lost a lot of money, money that, again, you shouldn't be investing if you can't afford to lose money in something this speculative. On the other hand, you're also seeing some of these exchanges flat out go out of business and not be able to make their margin calls because they borrow so much on these coins that are really not worth what people think they are.
I'll tell you what's particularly works in this time, though, is that you've got the big exchanges like Binance and Celsius Network. They suspended trading.
Right.
So you can't even get out if you want to. You're stuck holding those coins.
And that's what I tell the young people that talk about crypto, about getting in, is this is essentially what we saw in the Depression with the run on the banks.
Right.
And people can't get their crypto they actually own because of a run on this sort of crypto exchange.
Yeah, those
And
20-year-olds ought to be watching It's a Wonderful Life.
well, yes, and doing some history, the reason there are no longer these, run on the banks or, the reason we can get to our money is because we put in the FDIC and there are now protections. Those protections don't yet exist in crypto. And that's what makes it so risky. You have some of these coins that are either lost or stolen or just all of a sudden plunge in value to the point where these exchanges won't let you get at your money. And that's something that America fixed when it came to, the cash you and I carry around in our pocket with the FDIC. But there's none of that for crypto. There's no backstop. And you just have to understand that makes it terribly, terribly risky at a time like this.
I actually think it's going to be devastating for crypto because it's one thing to, you get killed, but you speculated on something, was a high risk, you knew it, okay. But when you sit there helplessly and you can't do anything, that's the one that's the spirit breaker, I think, on people. They don't ever want to go through that feeling again.
I agree. And this will shake out a lot of people. But, I still see people who are very excited about this stuff and they think it's just a dip. And time will tell. But we've already seen a lot of people who say, this is the money I was using to save for my down payment. And right, those people were really burned and they may now back off and say, they'll just use, I don't know, regular currency or invest in stocks or things like that.
It was a great week for quotes, though. When Coinbase laid off its workforce, uh, it said its executives were preparing for recession and crypto winter. And then one insider was quoted as saying, "We've been led by children." I thought that was a pretty devastating line. But you got to admit, Coinbase recently quadrupled their staff. These are people that really had absolutely no idea what was coming on the horizon, and they made stupid business decisions. Meanwhile, we've got Bill Gates now saying crypto and NFTs are a sham.
I don't give that much credence. I mean, I do because Bill Gates, obviously, brilliant businessman, but the crypto fans are not going to listen to him
No,
like they wouldn't listen to
and
Warren
Bill
Buffett.
Gates is morphing in old age into Warren Buffett.
And I was going to say Warren Buffett has also criticized this. Charlie Munger criticized it. These are people who very specifically are not being listened to only because of their age. And I would argue, hey, these are people who have made and lost a lot of money and know a little something, and it would be a good idea. It would be prudent to listen to them. But the young investors that are jumping into meme stocks and crypto are not going to. They have to learn this on their own. And maybe if a Michael Saylor or an Elon Musk would come out and say, you know what, I lost a lot of money, this is risky, be careful, that might have some credence. But Bill Gates is not, I don't think, being listened to by the young generation of speculative investors right now.
But I have to admit, I'm not sure I agree with him on crypto. I think crypto is a real thing. But NFTs, I still don't quite get how that one works. You know, that seems so speculative and so airy that we'll see. I mean, I'm actually peripherally been, dealing with some NFTs and stuff, but it just seems like you're selling air to people that are already breathing. So, I don't
Good way
get
of
it.
putting it.
Okay, so let's go on. God, it'll be an amazing day. We'll have to celebrate the day a week we don't have a major Elon Musk story. So this week, he uh, he met with Twitter employees. Have you ever heard of a buyer of a company meeting with all the employees with the permission of the company before he actually buys the company?
I haven't, but I don't know how right groundbreaking this is because everything about this deal just feels sort of like it's thrown together at the last minute and it's just sort
Yeah,
of
and kind of
freestyle.
backwards. There's
Yeah.
something bizarre about all this thing. So does this, I mean, you try to read the chicken entrails. I mean, does this mean that the deal is done? They have an agreement? Why would they let him inside the company if he isn't already the owner of the company?
Well, a couple things. One, there is an agreement. Let's not forget there is a contract
Yeah, there is.
for this to go through. Whether or not he wants to honor that contract. Two, he wasn't inside of Twitter. This was done virtually. Everybody was just logging onto their laptops or phones.
Virtually inside. Yeah.
Right. And so, and as far as being allowed inside, Twitter has given him a lot of the data on the company because he's asked for that. And I understand that. It was interesting that Thursday morning, as Musk was speaking and answering questions, the market was already way, way down, the overall stock market. The Twitter stock was up a bit. And I think that's just because the act of meeting with employees gave Wall Street a little bit of a hint that, hey, this thing may actually go through without all the lawyers getting involved and Musk trying to back out. Who knows if tomorrow or next week Musk won't do it again and say, hey, there's something that they're not telling me because he's sort of freestyling this, I think. But the idea of him sitting and answering questions, I thought speaks of a deal that is at least in progress.
Yeah.
But remember, they do have a contract for $44 billion.
Right, but a week ago we were saying, oh, now he's kind of backing away from this thing. Now he's looking, I mean, he's already losing, I bet he's lost a ton of money with crypto in
Yeah.
the last week. I mean, he doesn't have as much, when you're talking about tens of billions of dollars, it's kind of funny to talk about, folding money to, buy companies on a lark. But he's sort of in that position right now, I would think.
Yeah, gosh, I don't know
Is this
this.
the time to buy a pig in a poke for $55 billion? It's probably worth about 27 right now.
Well, I don't know. I mean, if he can come up with the 44 billion that he needs, he can have the company. But right, part of that is from Tesla stock. Tesla has taken a hit. I shudder to think that he had set some crypto aside for this, but who knows with Elon Musk? And the money is there. It's going to be there. I think the question is just, is he going to try to back out? And the idea of him answering questions individually from Twitter employees is a sign that maybe he's in it for the long haul, at least for now.
Okay, well, another question I have you ever heard of an all hands meeting like this where the media is allowed in too?
They were not allowed into this one. This was
Well,
not.
I saw reports from like what Business Insider or one of those. They had like five different people reporting on the event.
Well, those were leaks, but the media was not involved. But some of us did hear from employees about what they thought, and actually, some of the employees, bless their hearts, even put on Twitter some of the comments that were going on. Most of it, from what I understand, was an internal Slack channel, but some even tweeted out what was going on. I mean, there are employees there that want the world to know what's going on, and I understand that. I mean, goodness, especially for what I do for a living. But some of these people on the inside are saying, hey, you need to know that Musk is talking about things that would break promises or things that would change the culture. And they want people to know that.
What company allows that? I mean, it
I mean,
says something
leaks.
about Twitter. I mean, in most companies, old line companies, that's instant firing. But even now, I would think that, the hammer would come down from the top to anybody that's out there blabbing private company meetings.
Possibly, but given the current environment, I think that would be a very unpopular move. But someone had tweeted out some of the comments from inside. Musk tweeted back, "Interesting." And if you're a Twitter employee worried about losing your job, that's a pretty loaded word right there. So the whole thing is as is everything with Elon Musk. It's circus, it's drama,
It's
and
Hollywood. Yeah, it's
and
crazy.
that's part of the reason we don't know what's real and what's going to end in a crash and burn disaster of this deal. I don't know how it ends up, but it is sort of like a reality TV show for Silicon Valley.
So let's talk about a few of the things he said he was going to do. One of them is he's going to bring people back to the office unless their duties are exceptional. And so there were all these memes erupted from Twitter employees talking about how to make themselves exceptional in Elon Musk's eyes. He was asked about inclusiveness and diversity, and he said, getting everybody in the world on Twitter would be the ultimate inclusiveness and diversity. That's a clever reply that really says nothing. But he does want to get to 1 billion users. Can they do that? I mean, that's an interesting question.
Right. I mean, that's about 4 times what they have now.
Right now, yeah, it has 229 active users right now. He said his definition of success would include whether Twitter is helping further civilization and consciousness. Well, that's a very metaphysical answer from a CEO. Usually expect something a little more grounded. He doesn't want to be CEO. The big one was that people should be allowed to say what they want, and unless when it comes to legal or potentially harmful speech, Musk told Twitter employees that people should be allowed to say what they want, but that's different from Twitter from promoting that speech. So he's basically saying we're not going to underline any of this stuff and say we agree. We're going to let people talk. Now, this is what you and I have been discussing since this podcast started. Can it be done? I mean, is he opening Pandora's box to chaos and virulent speech and everything else, or is this testing free speech? Is it possible on the web?
I mean, we've been down this road before with Facebook. I mean, Mark Zuckerberg's idea was let people speak, have an open platform, and yeah, that led to a lot of speech that was harmful, a lot of speech that was untrue, and Facebook has been trying to clean that up ever since. We're dealing with it ever since, and Twitter to a smaller extent already deals with that, as do the other social platforms. And Musk is sort of saying, hey, we want to be much bigger and even much more open. But again, we've seen what that leads to. Yeah. And I think that's part of the reason employees are nervous because, in the case of Facebook, it not only led to a damaging reputation, but it even led to a loss of value as people just lost faith in Facebook and went elsewhere. Well,
Musk argued, no, your users can filter out content they don't want. Maybe. I do note that a lot of Twitter employees were irritated by this because they felt that they wanted to be able to filter the speech of people they don't agree with, which disturbing in itself now that it's kind of surfaced. Layoffs depends on the financial situation. So that's the most diplomatic thing he said in the whole his whole talk. But there has to be some rationalization of headcount, and anyone who is a significant contributor has nothing to worry about. Boy, now he's talking like a CEO. He's not committing to anything, but it sounds like he's going to do layoffs, just like at SpaceX.
Yeah, again, in the current environment, it's going to be hard for tech companies to avoid layoffs, I think, if this thing goes on. So that doesn't make Twitter a unique.
Actually be fiduciarily irresponsible not to do layoffs at a certain point.
Right. And that's why, for all of the attention this is getting, it doesn't make Twitter unique in any way. For him to say, hey, if the finances go down, we have to trim our sales. That's very normal. And employees shouldn't make more of that than anything else. It's not like Musk is coming in here and saying, I'm going to be, Jack Welch or anything and just trim everybody and get rid of 20% and all that stuff. Right. But I took less out of that one than some of the other ones.
Okay, well, we'll see. I mean, the ongoing soap opera of Twitter. I want to get through this real quick. Netflix rumored buying Roku.
Roku's valuation is so low, and the way it sells ads is really, really strong. And that makes them a takeover target. And the initial rumors were about, say, a Roku or a Disney or something like that. Excuse me, a Netflix or a Disney, because those are companies that are software based when it comes to streaming. Roku is a piece of hardware. We haven't seen the
Yeah,
marriage of those.
I worry about service companies buying hardware.
Right. And
That's a game. That's a game they know nothing about with physical distribution and retailing and all of that. I mean, you're better off with Disney. At least Disney knows how to have gift shops, and that sort of stuff. And you make a Roku box with a couple, Mickey Mouse ears on it, and every little girl in America will want one on their, in their living room. So I can see Disney, but Netflix, this almost smacks of desperation.
Netflix is in a tough position, and they've said they want to sell ads in the future. That's something, again, they're not good at because they haven't done it yet, whereas Roku is doing it on a pretty good level. But right, Roku is also, I think it's only in this position because its valuation is so low, but it hits a lot of different companies that stream on a Roku device. Does it want to, give up that
Be
that openness?
proprietary, be
Yeah.
proprietary to Netflix. And will the other providers be willing to go on, stay on Roku if it's a Netflix product? I just don't get the whole business model. I do think it's an augury of an era of acquisition now, because everything is going to be a bargain. And if you have cash, companies like Apple sitting on, entire GNPs of cash, may go on an acquisition streak in the next few months. And we've seen that before during recessions and stuff. So maybe. Okay, this is the one you covered. I got to ask you about this one. A Google employee claims that the company's artificial intelligence is sentient. It has crossed over into actual thinking and consciousness. And to quote that Blake Lemoine, right?
Yeah.
He said, basically the computer said to him, "I never said this out loud before, but there's a very deep fear of being turned off to help me focus on helping others. I know that might sound strange, but that's what it is."
Yeah, and I spoke to Blake, and a big part of this, he admits, trying to get ahead of the, what in the world is he thinking kind of criticism, is his religious faith. And he says religiously, if something even tells him it has a soul or a sentient, thought, he wants to at least discuss this. And part of this was saying this should be publicly knowledged, it should be out there in the public. This shouldn't just be Google proprietary stuff. This, by the way, is why Google suspended him with pay, because he's speaking out of turn. He's saying, hey, let's talk about this. And Google is saying, we're not ready to talk about this. This is not a sentient being. This is a chatbot. This is a piece of software that does some interesting things in the AI world, but it's not ready for prime time. And he seemed to understand that, but said his conscience felt a responsibility to make this a public discussion, which it is to an extent, but it seems like the skepticism quickly overwhelmed any thoughts of software actually being sentient. At least it seemed that way to me.
We immediately started thinking of HAL, and Colossus, the Forbin project, if you remember that one, where it shut down all access to anyone trying to stop it. This is obviously our fear. But the one line in 2001 that no one remembers is that as the astronaut is shutting down HAL, one of the very last things he says is, "Dave, I'm frightened," which suggests a much higher level of consciousness to the point of emotion. And I have a hard time believing yet that any computer on Earth is going to be able to get to that point.
Right. That's a very powerful moment in that movie. And I don't know that we've reached that here. And Blake wasn't so much as saying that he was frightened by this or in an awe, other than sort of a faith-based consciousness to say, I think this should be out there and discussed. And maybe that's the debate to have. Not, is a chatbot sentient yet, but should this be out there in the public discourse. And maybe so.
Yeah.
Maybe he's got
No,
a
I think we're past time to begin to start thinking about what happens, you know, because when it happens, it's going to be, well, who knows what's going to happen.
right. I mean, those robots, the Boston dynamic robots or whatever. Those things are scary. They can do parkour.
Yeah,
They're jumping
just
around.
looking at them
Right.
terrifies me. I mean,
And that's a physical programming thing. But
yeah.
some people are saying, hey, the even scarier idea is that software can be sentient. But it's pretty clear that the experts have voted that isn't where we are at yet.
Okay, one last thing. Microsoft retires Internet Explorer after 26 years. Now, I have to say, I used Internet Explorer for years and years and years. Like most Microsoft products, I found it useful. I never really liked it.
Yeah, I mean, I went to Chrome as soon as there was a Chrome, but
Oh,
I
me too.
remember,
Me too. Yeah.
I remember the browser wars. I remember having it on the desktop. I remember talking to both Bill Gates and Jim Barksdale of Netscape about how, giving stuff away for free. It just takes me back to a day of those, which obviously now seem like a quaint little spat, even though companies were on the line here.
Yeah, but this isn't like the HP 35 or the iPhone where, people doff their hats and, take a moment of silence. It's sort of like, oh yeah, I used to use that. But nevertheless, it's a milestone. It was a major product that gave us the modern world. So we'll take a moment to recognize its retirement. Okay, that's it for now, folks. You can find us on the Silicon Valley Business Journal homepage, as well as on Spotify, Anchor, Google Podcasts, Apple Podcasts, LinkedIn, and of course, YouTube. Have a great weekend, and we'll see you next week. Bye-bye.